All right, hello, welcome everyone. Good morning to all. It is Thursday, March 16th. Yesterday we did a live stream after when the market closed at 4 p.m. for about an hour explaining our new course, taking your questions and answers. So if you guys want to check that out and get more info on our new trading course surrounding futures with volume profile and the depth of market, actually learn how to read the depth of market, go check that video out. It was a live that was done yesterday. And we do have an offer for a coupon in the description of that video that's going to last until the end of this week. So I highly recommend go checking that out, where you can trade live with myself on a daily basis. But today, the main thing that we're going to be talking about is these financials, right? Is Credit Suisse on the verge to reproduce another massive dump on its liquidity crunch? So we had a lot of news overnight, I guess, coming out of Credit Suisse and Europe, and it will borrow as much as announced to borrow as much as 50 billion. Yes, 50 billion. That is billion with a B. 50 billion francs or 54 billion US dollars from the Swiss National Bank liquidity facility. So the troubled Swiss bank also announced public tender offers by Credit Suisse International to repurchase certain OPCO senior debt securities for cash of balances of up to $3 billion francs. Sorry. The news sent Swiss shares up over 32% higher after reaching a new all-time low in the stock itself. So this was the pre-market um, bounce, and those US listed shares gained about 9% before the bell. So Credit Suisse dropped about 25% in Switzerland yesterday after the bank's top shareholder, Saudi National Bank chairman Anmar Al Khudairi, ruled out offering further financial assistance. And on Tuesday, Credit Suisse disclosed a material weakness in its reporting procedures and was developing a remediation plan to address the same. However, it is said in 2022 results released last month that were not impacted by material weakness. So why the hell do they need $50 billion is the question, right? There clearly is some kind of liquidity crunch that is plaguing all banks. Credit Suisse, even months ago, was showing a lot of signs of weakness and signs of failure. Now, can it join the ranks of the SIVBs of the world and the recent liquidity crunches that we've seen? Not to mention, JP Morgan said that it would expect the Fed to actually pump $2 trillion into the system to kind of help this solvency that we've seen. So a lot of news that's surrounding these financials, and Credit Suisse is a fairly large bank that's really getting really showing a weak hand here. So yesterday's rout pushed Credit Suisse to request a public show of support from Swiss National Bank and Swiss regulator FINMA. In an effort to calm markets, the Swiss Central Bank and FINMA said that Credit Suisse meets capital requirements. The authorities also assured that investors that the problem of certain U.S. banks does not pose a direct risk of contagion for the Swiss financial system and market. So we'll see. We'll see how that shapes up, because that is an awful lot of money to request as a liquidity backdrop. So, in other U.S. news, right, First Republic Bank (FRC) is evaluating strategic options, including a potential sale, which initially sent the stock 4% higher after the bell yesterday. However, the stock since erased those gains and sank more than 23% before the bell today. So, the bank, whose shares have plunged about 80% in the past week, is in the wake of failure of similar to that of Silicon Valley Bank (SIVB) ticker symbol, and is also weighing options to improve its liquidity. The lender is likely to garner takeover interest from larger rivals, and earlier yesterday, the S&P cut First Republic's bank rating to junk on high outflow risk. On the other hand, we can see that some might say the bank is managed well and has a significant deposit base, and investors can earn significant returns here by leaning into fear and buying the bloodbath. This is what some analysts think. Now, naturally, I'd probably steer clear from these smaller banks that are getting absolutely destroyed, right? I think there's still strength in some financials after all this chaos is over to be bought, and I don't think it's high risk, high reward type play. The ones that are near faltering, if they don't falter, there is going to be a nice pickup. So the FDIC has set tomorrow as the deadline for banks interested in acquiring Silicon Valley Bank and Signature Bank to submit bids, and only bidders that have an existing bank charter will be permitted to look at the bank's books before submitting their offer. One condition that has been set is that an acquirer must surrender the bank's cryptocurrency business. Meanwhile, bigger banks appear hesitant to make an offer for SVP. JP Morgan and Bank of America turned down the opportunities to acquire the bank before. It was seized last week, and SVB is currently conducting a strategic review and is exploring filing for bankruptcy protection. So we'll see how that kind of shapes up. But in today's news, one of the main things that we do have to watch that comes out in about 7 minutes or so, we do have the ECB interest rate. So the expected is a 50 basis point hike. Right now, odds are a little lower. Today's Thursday. Yesterday, we had a 60% chance of a 50 basis point hike, and today the ECB hike is set at 35% chance of a 50 basis point hike. So this is interesting because a lot of the EU banks, well, not a lot, but there are EU banks that are vulnerable to these rate decisions, just like we've seen in the US. So that's going to be very interesting to see how that shapes up and how that changes. If there's a 50 basis point hike, that means that the ECB is also looking to hinder down inflation, which could trickle into their financial system. Then we have this global kind of liquidity crunch that might be going on. So that's going to be very interesting to note. Other news that we have today, we had initial jobless claims that came out. 205,000 expected, 192 that came out. We also have the EIA natural gas inventory, and we have the Fed balance sheet that comes out after the bell. So it's going to shape up for a interesting morning, I should say. Realistically, interesting day. We might chop around before we see some of that sell side that comes through. There's a huge level that you have to take a look at. A lot of these criteria are just getting bought up, right? Like the market's just getting bought up on every reoffer that we see. So even if we do get an offer today, I expect that the bid does come out at some point, realistically. Massive level that you have to keep an eye on the S&P 500 is going to be the 3905. 3905 is a huge area, massive pivot that the buyers are going to want to defend. You can stretch at 3905 to 07. You can stretch that area like that, and that's going to be a huge pivot. If they manage to reoffer below that, well, you know what? You're going to probably look at a decent bit of downside. That could even potentially take us back down to 3870. So the way the market's reacting to a lot of this liquidity issue and more money seemingly pumping into the market from the Federal Reserve, right? We have inflation, right? PPI numbers were actually really good yesterday. So inflation is dropping significantly. So that could make the case for the Fed not to hike so aggressively. Remember, next week we do have a Fed hike. Now priced in at 25 basis points, a 75% chance of that happening. Yesterday, there was a 60% chance that there was going to be no hike whatsoever. So still, hikes are in the midst, and are we going to get that Fed pivot sooner than later? I think that might be the case based on what's going on. So if the market hasn't necessarily collapsed based on a lot of these liquidity issues, I think that the lows in the market, if not seen yet, are going to be seen, and there's going to be a lot of dip buying. Just take a look at what's going on with tech. So in terms of S&P futures trading, check out that 3905 area. That's going to be a massive pivot today. If you want to know more levels, more trade ideas, come check us out at community.tradeproacademy.com, as well as our live trading room. So don't forget, yesterday we did post a description with a discount for our future scores. This is the first time this has ever been done, and that's going to be in our last live that we did last night. So I hope everyone has an amazing day, and I'll see you guys tomorrow to wrap up this week on OPEX. So thank you and take care.